All right. What is up, tycoons? What's up, traders? Super excited for today's video. We've been absolutely crushing it in the Discord. I got to go over so much with you guys. It's been a minute since I dropped a video. My son was actually just born this past Sunday. So, family first, been really tied up with the baby. We're going to break down some things. Before we get into it, okay, did you guys know that buying in the middle of the day has produced the best returns? Okay, that's exactly what this chart right here shows you. Okay, the gray line is buying in the middle of the day, and you can see buy and hold, okay, is the second worst performing. All right, the very worst performing is buying in the first half hour of the day. Since the S&P 500's last all-time high on January 3rd of 2022, the prior close through the first half hour of trading has accounted for essentially all of the market's decline. Okay, and buying within the final hour of the day has produced the second best return. So, maybe, all right, if this is true, maybe you shouldn't buy in the mornings. Maybe you should wait until the middle of the day or perhaps the final hour to start your purchases. Now, of course, this is not financial advice, all right, but this is just some really interesting data that I really enjoy. And if you take a look at this week alone, buying in the middle of the day has produced some really good returns. Now, let's go ahead and move forward. All right, there's a lot we're going to cover in today's video. We're going to cover a little bit of the bonds, right? We're going to take a look at HYG and TLT. Now, I am going to start doing some more dedicated bond videos. We're going to be covering HYG, LQD, a lot more of the bond ETFs, J and K, right? And really dive into those a lot more, as I know there's a lot of good bond investors and people eager for that content, but not necessarily much bond video out there or good content when it comes to YouTube. So I'll try to supply that for you guys. Now there's some really interesting data here. Now, what initially crashed the bond market was the ADP payrolls. All right. But we'll break down this chart a little bit more. In ADP versus NFP, they often don't correlate, right? And we actually saw that bond market rebounded strongly after the big crash from ADP. We're also going to take a look at some stocks that I'm paying attention to right now. I went over XLV and XHE in my last video. Both of those are up since that time. We'll go into kind of why, I'm interested in those. We're also going to take a look at a couple individual names like Meta as well as Microsoft. Okay. And if you guys want to see me do more individual stocks, I'd be happy to do that. Oftentimes, whenever I do individual stock videos, like with just one stock in a video, doesn't really get much views. So I don't want to waste all my time. But if you guys are interested in it, I can definitely do some cumulative videos. It really just go over a lot of the stocks that we're paying attention to in the Discord. These are some that, have been absolutely ripping. All right. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal financial advice. So please be sure to read through the full disclaimer. Today's video is sponsored by Simply Wall Street. It's a really great, amazing platform that I've used for a while. The market has gotten really frothy here, and you guys can get a 14-day free trial by using the link in the description or pinned comment down below. And Simply Wall Street does fundamental analysis for you guys. If you're not a pro, they have their pros doing it. It's a really great platform. I've used them for a while, and it can help you perhaps see if something is overvalued, or perhaps you can find some gems in here that are undervalued by using their platform. You can also email me anytime for a one-on-one personal session at zackleytrades@gmail.com, and we can work at setting up a time for that if you guys would like a coaching session. Now, let's get into this initially right here. What we had was a big crash in the bond market, okay, due to the ADP, right? Payrolls. And it would be logical to think that ADP payrolls offer an excellent guide to the NFP numbers that follow, but this is not the case, right? And the short answer is, as evident in the graph below, that this is not so great of a guide, all right, when it comes to the NFP. And so in red here, we have the NFP, and then in blue, we have the ADP. And you can see that, these oftentimes are not correlated with each other, right? NFP will come in higher, ADP will come in lower, ADP will come in higher, NFP will come in lower, right? And so they're not always correlated with each other. And so a lot of people in the Discord, we actually started to buy into the fear whenever the bond market was crashing initially. And, we saw a very strong rebound. TLT has been raging here as of lately. Now, I did not master that trade. Okay, I sold way too early, but I was focused on a lot of other things and kind of just wanted to get out. That was a pretty big loss at first, but it rebounded, came back around, and TLT has been absolutely raging. We'll dive more and do a technical analysis in the later half of the video. So if you want the TA, you can fast forward to the end, but there's some really amazing data that you guys need to pay attention to. So don't skip through unless you're only interested in TA. Now, the bond market is actually more volatile than the stock market right now. Okay. And you can see this clearly by looking at the move and looking at the VIX. Okay. The move is the volatility of the bond market. Okay. And the VIX is the volatility of the stock market, right? And really, ever since March, okay, which is when we had the bank collapse, all right, and the Fed essentially started printing money again, we can see that the bond market volatility has sustained elevated higher than the stock market volatility. And that's pretty clear and evident right here, right? We talked about the massive overreaction in the bond market to the ADP. We see this huge crash right here. This is SPXB. This is just basically a broad-based bond ETF. And you can see that all of those losses that we had have already been recovered here in the bond market. Largely due to inflation, right? And inflation coming down, which is a really big factor, okay? And we're going to describe that a lot in today's video. Stocks always move higher after inflation peaks, right? And you can see here, inflation peaked and it started to come down and the stock market has started to rally back up again, right? We have the inflation rate in blue. We have the S&P 500 here in red, in black. And so that's essentially what you can see, right? Is, you see the peaks in inflation and you see the stock market start to go up, right? You see a peak in inflation, stock market start to go up, peak in inflation, stock market starts to go up, peak in inflation, stock market starts to go up. Okay. So, it's just really simple stuff that a lot of people are overlooking, and we are actually starting to see inflation go down. Now, whether or not it's going to be sticky and remain around or whether there's going to be another wave, that's a different story, right? This summer is going to be really interesting. And we could see inflation come back around in the second half of the year. So that's something you want to keep in mind as a possibility. Now, valuations have expanded substantially recently. All right. And so we're looking at the S&P 500's trailing 12-month PE ratio. And we can see that, they have really started to go up, right? We're starting to see an increase here in the the trailing 12-month PE ratio. All right. So this is what I mean by, using that platform, Simply Wall Street. There's a lot of stocks that may be overvalued right now and maybe just be rallying with the rest of the market. Or maybe there are some good values out there that you guys can use and find. That's just kind of what I want you guys to be aware of. Okay. If we were to draw a little bit of a horizontal line right here and just try to draw like some type of a rough median here. Okay, you can see that we're on the upper half of this right now, right? So things are starting to get a little bit frothy, but that doesn't mean that there's not more upside potential. Okay, going back to inflation, we can see here how stocks move higher after inflation peaks. These are just some highlighted areas right here. We could highlight this area here too as well, right? Where inflation's dropping, stocks are starting to go up. The big question is, are we going to go on some big, massive tear like we did over here, right? Pay attention how inflation peaked right here, okay? And then it actually went back up again, and we saw a decline in the stock market afterwards. But then after that peak and inflation started to go back down, that's when we saw another, bullish phase right here, okay? So, inflation typically does not just move in a straight line up or down. It moves very, volatilely. And so, we could see this start to peak back up. That's definitely something you want to keep in mind. Right. These are just some more examples. I kind of already highlighted a bunch of these examples right here. And this is just another way to look at it with stocks rising after inflation peaks. Peak inflation has been favorable for stocks, right? If you take a look at the index returns following 6 episodes when inflation peaked at high levels, it's been very, very nice, right? In 1942, 47, 51, 74, and 1980. Then we have the current peak of June 2022 right here. That's where we're going to be at, is this line right here, this kind of olive-based color. But PE ratios do typically expand after inflation peaks, right? And so this is going to be, stocks going up, right? You're going to see that price to earnings expansion. And that's the biggest contributor to stock returns post-inflation peak. And that's what we're seeing right now in the market. And another thing is we're really seeing earnings expansion due to AI, right? AI is largely due to this because people don't really know how to value AI, except in certain companies like NVIDIA, where, they're essentially selling the chips, making the AI. So people are going to, have to be using them a lot more essentially. So essentially, we're seeing lots of PE expansion in the market right now. This is very typical after seeing inflation peak, right? If you look at the 2022 valuations, they were unlike other episodes. So, something to be cautious of right now is we have a high PE starting point, which leaves little room for error, right? What we're looking at right here is the S&P 500 trailing price to earnings ratio at the starting point of the 6 episodes when inflation peaked at its high levels. So that's something to be a little bit cautious of, right? I know there's a lot of bears out there. Earnings do tend to be weak when inflation falls. Okay. That's another thing to consider, right? If inflation is going down, a lot of times inflation can boost up the earnings of these companies because they're able to, increase the price and pass that price, increase down to the consumer. This is something you do need to consider. I've got a video coming up here in the future, in the short-term future, really, really good going over, this next earnings season. I think that there's, some really big shocking data that I want to present you guys. So make sure to stay tuned for that video. Like I said, I'm just a little bit behind, on the videos right now. So trying to catch up on this one. Now, the PE multiples tend to fall post inversion, right? And this is talking about the 10-2-year treasury yield inversion. And so, we see it inverted right now. It hasn't uninverted, right? And we haven't seen that post inversion yet. But typically after that, that's when you start to see PE multiples start to fall. Okay. They do tend to fall after the post inversion. And a lot of times that's when people talk about the recessions is once the yield curve uninverts, that's possibly when we see a recession, right? Now, these are the yield curve inversions predicting a rise in unemployment. The labor market has been extremely strong, right? But, once we start to see that, those yield curves uninvert, right? That's typically when we see unemployment, and high unemployment is usually associated with the recessions, right? You can see the rise in unemployment here, here, and here. All of these led to recessions. And so, we're not there yet. Okay. Everyone's screaming about the yield curve. They've been screaming about it for like a year now. But, until we actually start to see it uninvert, that's typically when you start to see the rise in unemployment and the recession, right? So we're not exactly there yet. But rising unemployment is a headwind for stocks. So once we start to see that, that's something you want to be cautious of, right? The average S&P 500 returned 6 months prior to the start in rising unemployment and in the 9 months thereafter. All right. And you can see, that it's typically a headwind, right? In the first 3 months after you start to see rising unemployment, you start to see a nice little decline here in the stock market of about 5 to 6%. The worst returns are typically seen within the first 3 months of rising unemployment. And after that, about 7 to 9 months out later, that's when you actually start to see things start to go back up again. All right. Now, when we look at the consumer discretionary volume advanced decline percent, all right, this is actually a bullish signal right here. And what we're looking at is this box up here. Once we reach this level here, which, we've reached here recently, we've started some really, really tremendous bull rallies, right? This is the S&P 500 here. And so, you get these long-term secular trends once we come up into this level on the, advanced decline percent here on the consumer discretionary sector. So that's XLY. Amazon has actually been raging. Shout out to Amazon. It's a big chunk of XLY. Just closed out Amazon options for, basically 100% today. So shouts out to Amazon, been really killing it. Looking to possibly potentially get back in before earnings. This right here is the NASDAQ monthly. Okay, and we're starting to see this curl up here on the PPO. This is a bullish signal, guys. And if we go into the data, once we get this bullish signal here on the monthly, right? If you look at the S&P 500 performance following long-term NASDAQ monthly momentum flip, it's very, very nice. Okay, we're looking at very, very positive numbers, 1, 3, 5, and 7 years out. Okay, also on the NASDAQ, extremely bullish numbers here. And this is long-term, right? Not so much day to day, but after we get this signal here, these are the type of returns that we're looking at in the S&P and the NASDAQ from 1978 up to the present. So we're going to see how it, plays out. Okay. But this is a really, really bullish signal. And if this signal continues, we could be due for some really nice gains in the stock market. Okay. Now there is something called the Walter Deemer BAM signal. All right. This is from Game of Trades. And this trigger was basically signaled in January, and there's been some really impressive returns. Okay. If you actually take a look, Okay, basically 6 months out, you start to see some really, really impressive returns in the market. The average signal median, okay, about 6 months out is 11.1%. All right, and that's exactly what the S&P did 6 months out. It basically went up 11%. Now, if you look at 12 months out, okay, you see 19.2%. So if this signal is going to be accurate, the S&P 500 could finish the year up about 19% on the year, which again is going to be really, really bullish data right there. Now, AI exposed stocks led after the ChatGPT launched. The stock market pretty much bottomed right around the release of ChatGPT. AI has been a big powerhouse and a big force behind a lot of the stock market rally, in my opinion. On top of inflation and some of the other macro things and economic data. AI is definitely something that you guys need to pay attention to. There's lots of AI stocks. Let me know if you guys want me to get into some of the different AI stocks I'm looking at besides the big famous ones, right? There's one called POAI. Have shares in that one. The shares are up 40%. There's lots of different AI stocks, right? To cover besides the ones that everybody knows about. You want to find the ones that actually have a solid company and that aren't just a shell company, basically just using AI as a hype to ride the AI bubble. And, eventually those stocks are going to deflate. But when you have actual solid companies using AI and, making earnings, making revenue off of that, those are the companies that you want to look for. Okay. So if you want an AI video covering the different AI stocks that people aren't really talking about, like some of the ones that I just mentioned, make sure to let me know in the comments below and I'll be happy to get to that. All right, so let's go ahead and get into some charts, right? So we're looking at TLT first right here. You can see TLT has had a really, really strong past few days, okay? And again, we saw this large overreaction to a lot of the ADP results in here, all right? Then we got good inflation data came out. We had CPI, PPI, different things like that. And, TLT has started to go up higher. Now, when we zoom out of things and look a little bit more of a macro structure, all right, we can see here that we did actually fill the gap down, right? So we had this gap down right here to fill, all right, and we finally ended up filling that gap down on this huge sell-off that we had. All right, there's a gap up here to fill, there's a gap up here to fill, and another gap up here to fill. So, lots of gaps on the chart right now. Okay, we can officially go ahead and take this one off now that we finally have filled this gap. And there's still this pretty relevant gap all the way down here to our bearish price targets, okay? We've got some bearish price targets of about 97 to around $95, which would take us down here to fill this gap. Now, how would this happen, right? What's a logical scenario for why bonds would continue to go lower and yields would go higher? Well, for one, interest rates are actually going to go higher, right? We have the next FOMC coming up here shortly, and they are projecting rates to go higher. Okay, and if we continue to see that and we continue to see a strong labor market, that could result in higher treasury yields, which would result into bond prices going lower. Now, we did get a little bit of a triple bottom bounce right here, right? If we zoom back in a little bit and take a look, we can really see that we got a very nice double bottom here, right? We also had some bullish divergence here. If we go into some of the smaller time frames, let's just go ahead and highlight that double bottom, right? If you take a low right here to the low here, you can see, 1, 2 right here, double bottom. All right, we also had some bullish divergence forming here. Let's go down to like a 1-hour chart. Okay. And you can see the divergence that we had forming here. Or let's go down to the 4-hour here, actually. Okay. And so, on the 4-hour, you can see highlighted by these circles on the chart, we have lower lows, right? So the price action is clearly making a low here, then a lower low here. But on our RSI, we actually have a low, then a higher low. This is a simple term known as bullish divergence. It's an indicator that, the relative strength is going up. We're increasing in relative strength as the price is going lower. Oftentimes you tend to see some type of bullish activity surrounding that. So a lot of this move up, here makes a lot of sense. Okay. From a technical perspective, and then from looking at the economic data and more of a fundamental standpoint, it does make sense. All right, that we're seeing a lot of this rally, and it did catch a lot of people by surprise. A few members in the Discord actually did really good. I entered and went long right here on these days and then held and closed around here. But we had some more people, actually continue to hold TLT and do really, really well on their option trades. So shout out to them. I've been focused a little bit more on some of the equities. If we take a look at our MACD right here, it's starting to curl back up to the upside. And if this curls above this yellow line here, that could actually be a buy signal, and that mean that we're actually going to continue getting some more bullish momentum in TLT, which is definitely a possibility. Just because we have this structure here taking us down to 96, 97. And filling that gap down here, it doesn't mean we have to, right? If we actually come here and turn on our 618 target, okay, right here, right, you can see we got very, very close to that target here for our wave 5, okay, and that would be the 618 right here, right around $98. So we don't have to come down here, okay, but this is just something. This is a big gap. Price action is, these gaps tend to fill about 90% of the time. So the big question is when they're going to fill, not so much if they're going to fill, right? We spoke about the MACD here. Let's look at our RSI real quick, okay? And we're approaching a trend line here that we have on our RSI. And if we end up breaking this trend line, we could end up seeing that MACD crossover, right? We've rejected here multiple times, and we're coming back up to it again here. The big question is, are we going to reject and head down lower, or are we going to get a breakout to the upside? If we get a breakout to the upside, most likely we would see our MACD line start to curl up above here, and we could look to fill the rest of this gap up on TLT just above 104. Okay. So that's what I'm really looking at when it comes to TLT. We'll take a look at HYG, which is basically, your high yield corporate bonds. And HYG, this is something that I've mentioned in a lot of the videos, but this is a classic look below and fail, right? So we had this key level here, okay, ultimately where we're looking for the breakdown of 73.77. And you can see we have this nice doji here, and then we actually held that candle again right here. And so we found a strong support here, right? We weren't able to flip this area from support to resistance and go below it and then reject it and continue heading lower. That would have given us the breakdown, okay? And this was our line in the sand. So you can see we actually held that retracement level very well, and we exploded outside of our original range, right? We had these two trend lines here. Okay. And we're looking to see, where are we going to break out to the upside or to the downside? And I gave this level of support if we went to the downside, and mentioned that you guys want to be careful of a look below and fail, right? A look below and fail is actually a bullish signal, right? And the reason being is because this point right here, okay, this is the bears full opportunity, okay, right in here to really show that they're in control of the price action and push price much lower, right? But in fact, they didn't. And what we saw was we looked below, right? Bears failed, and we actually went up higher into the range and broke out of the original structure here. So the whole reason behind this is because, again, bears did not take advantage of the opportunity here to really push price lower. All right. And in fact, this shows you that bulls are in control. Once you look below and fail and you come back into this range, it's a very bullish signal that most likely you're heading to the top of the range here. Right now, we actually gapped up over the original gap here. So we have a new larger gap down to fill. All right. So we do need to be cautious of that. All right. But we basically got our bullish signal here when we broke down, all right, and we held 73.77, and we're able to close above there on the daily. That was a bullish signal, and we have a very dramatic move to the upside, right? If we take the look from the lows to the highs, 3% move there in HYG. Not as volatile as stocks or anything like that, but a 3% move in a bond ETF, especially if you're trading options, can be very, very lucrative, right? Now we have another gap up here to fill around 77, and we've got another gap up here to fill around 78.25. So keep a close eye on those, right? If we continue to get good inflationary data, right, and maybe the labor market doesn't come out as strong, then it's very possible, we could start to see these bond ETFs, try to climb higher up to these different, gaps that they all have up to fill. Now, keep in mind, look at where we closed today on HYG, right? If you take a look at our levels here, okay, and we were to draw a line, all right, that's a pretty significant area. Okay, let's actually put a little box here and make it a supply zone. Okay, if you take a look at your supply zone, this is essentially where we're at right now. you can see that we closed within that range. So, this is an area of liquidity here, right? Where liquidity for downside pressure, liquidity for downside pressure, all right? And then we came up close to that range again, downside pressure, okay? So now we're back in this area. The big question is, are we going to see that downside pressure? Are we going to get a breakout retest, okay, and actually turn this sell side liquidity into demand, right, and turn it into buy side liquidity for the next move up? That's definitely something that I would pay attention to when it comes to HYG. Now, let's go ahead and move on, all right, and let's talk about some individual stock names, okay? We have Microsoft right here. Microsoft has had all types of news, and I just want to show you guys the power, right? If we zoom out to more of a macro scale right here, these were the pre-pandemic highs right around 191. But if you take a look, okay, and you look at where Microsoft found support, you take the COVID lows up to the all-time highs, right? Or the previous all-time highs. Sorry, we actually just went past there. But you basically connect your low here to your high, and it gives you your fib retracement levels, right? And you see we came up, we retraced exactly to the 61.8 level here, okay? And that's where we started the rally up, right? And so we're continuing that uptrend now, breaking past our previous all-time highs. There's been lots and lots of news here on Microsoft. Whether it's with Activision. Okay, they got earnings coming up here in a little bit. Lots of interesting stuff. If we take a look at our MACD here, the MACD hasn't even curled over to the upside. Okay, so Microsoft has been doing really, really well. Been getting in and out of this one in the Discord. We've been really killing this one. This is definitely one that I'm paying attention to, and a lot of these things are just showing lots of strength. Now, there's lots of things to be cautious of in the market right now. Okay, take a look at all the gaps down it has to fill, right? We have a gap down here. We have another gap down here to fill. We have another bigger gap down here to fill. 3 gaps here on the Microsoft chart. If the market was to turn, okay, and we were to see a correction in the market, these are areas where, price action is going to be drawn towards. Remember, these gaps, they tend to fill about 90% of the time. The big question is when they're going to fill, not so much if they're going to fill, okay? So, Microsoft is one that we've been trading a lot in the Discord. If we take a look at Meta here, okay, Meta is actually really, really interesting. I thought we were going to start to see some resistance. If you take a look, we have this, basically this macro zone right here where, this was previous resistance. Then we have support right here. We flipped that resistance to support. All right. And then we will support again. And then we just gap down below it. And we haven't revisited this area since February of 2022. Now, Meta has been extremely bullish, right? If we zoom in here, okay, you can see that we're actually in this bullish structure here, this buying structure, this trend line right here. This is very algorithmic, okay? This is controlled buying. You're seeing, selling at the top, okay? And you're seeing buying at the bottom here each time. And so eventually, this algo is going to get triggered and broken. And we're either going to see it, break to the upside or break to the downside, right? So, if we do see a pullback in Meta, these are going to be, from, after its most recent gap up, its fib retracement levels, we have 283, 273, and 263. Those are going to be some of the key areas that I'm really paying attention to if we do end up breaking this structure. Right now, this is that major supply zone here that we were speaking of. It wouldn't surprise me if we get a retest and then push back up higher in the short term until the market eventually turns, right? Things can't go up straight forever, but, I really haven't been interested in shorting anything, right? If you take a look, I mean, it's just been almost a straight line up really since November, right? I mean, we take a look at this, it's just going up and up and up and up. Any pullbacks are getting eaten right up and just continuing to move up higher. So, right now, it's definitely not an environment to be aggressively shorting. If we take a look at our RSI right here, you can see we actually broke down out of this initial bearish divergence trend line here. We'll make this a little bit bigger, and it's just been staying in overbought territory, right? A lot of people have been using these bearish divergences and, saying how things are overbought, right? This dotted line here is 70. This thing has just been living in overbought territory. And you can see we actually just broke out here. Now, what's going to be interesting is if we get this look above and fail, right? So we talked about the look below and fail earlier and how that was bullish. If this turns into a look above and fail, this is actually going to be a bearish signal for Meta, and we could actually see price try to break this algorithm right here here, this buying structure that we've got, and be drawn towards these levels. Now, ultimately, if we break below 263, that's our 61.8% retracement level, that's when we could potentially start to fill some of these gaps down that we have on Meta, right? There's lots of gaps down to fill, okay? Each one's surrounding earnings. We've got earnings coming up very soon. Who knows what earnings is going to do? You know, they just recently installed Threads. That's going to be really big for Meta. All right, we'll see if they can, you know, keep up with the numbers. If this is going to increase outlook and, you know, possibly boost the stock on earnings, or, you know, if valuations are a little bit too frothy, as, you know, this thing has pretty much just ran up again, like I mentioned, in a straight line. Really, if you take a look from November up to here, the stock is up over 250%. So, you know, earnings season is going to be a big time to reevaluate a lot of these companies that have continued to just rally. And a lot of people thought, you know, that that was going to happen the previous two times that we had earnings, that, okay, well, now this is way too frothy. It's got to pull back, beats earnings, right? Way too frothy. It's got to pull back and just continues to rise up. What's another one we want to look at? Let's actually take a look at XHE. This is one that I spoke about in my last video. And so what we have here is a known as the volatility contraction pattern. This is your VCP. If you watched last video, then you guys should know what that pattern looks like. We also have a little bit of a triangle forming right here, okay? But I'm really interested in this VCP right here, where we're essentially going like this. This is a volatility contraction pattern, and you look for an explosive move to the upside. I mentioned going long in this, okay? Now, I'm not long in XHE because I trade options, okay, and XHE does not have very liquid options. So, you know, I mentioned if you were a stock swing trader, that this would be a good one to pay attention to. That was right here at that 94.18 level with a stop loss, you know, just outside of this range here. Just so that way, if it does a look below and fail, you don't get stopped out just simply because we broke the trend line. And it's up a decent amount ever since then, right? If you take a look from there up to here, that's about 5%. And that was in last week's video that I highlighted XHE. This is the healthcare equipment sector. Now, if we actually take a look at the healthcare sector, XLv, XLv also has a very similar chart, you know, not surprisingly, being that the previous one was the healthcare equipment. But we also see this VCP pattern here, this volatility contraction pattern. We also have the nice triangle here, and we're going to look to see, can we potentially get a breakout here as well on XLV, right? We went long right around here. And you can see prices consolidating in this area. It's really struggling to get past 130.52. If we do get past there, 132.71 and 134.86 are going to be some of the key resistance levels. As far as support, we have 129.66 and 128.80. You know, those are some of the key areas of support. If we break below there, and there's a very good chance that we could try to break below this structure, and, you know, start to see some downside potential in XLV. One reason that I'm paying attention to this is because when you look at other things, right, we just looked at Meta, we just look at Microsoft, you take a look at some of these other companies, you know, that they're just so overbought, right? And eventually I think that there's going to be some rotation and some rebalancing coming into the market. And so I'm looking to see where that rebalancing, where that rotation could head into, right? If people start taking profits on a lot of this big tech, or let's say big tech doesn't really have as good earnings as people think, you know, where's some of that money going to flow into? And right now, the health sector, the healthcare sector, XLV and XHE, those are on my watch list as some of the potential areas that things could, you know, really move forward to. You know, speaking about, you know, tech and everything like that, if we look at the SPX, right, and we go down to our 1 hour chart here, this is really the bullish structure that we've been tracking, you know, in the Discord, and we're very, very close to the initial price targets, right? When everyone else was pretty bearish right around this time in here, okay, you know, essentially right over here, all right, this is actually where we started going long, all right, and the reason being is because we got a very, very clean Elliott wave, you know, formation here with the wave 1 up, 2, 3, our wave 4 down was exactly textbook. We had an A, B, C, D, E, falling wedge triangle pattern right here. All right. And then we got our breakout. We hit the 1, 2, 3, 4, 5 targets to the upside, and we actually extended to the 1.0 extension for this wave 5. I really didn't think that we were going to go this high. I thought that we were going to start to get our pullback here today. But you can see we actually came up, and this is exactly where we topped out here, right around 416 or 45.16 on the SPX. We mentioned that level this morning. Once we're above here, we basically said, the next price target is going to be 45.15, and lots of members did really good in the Discord. We do need to be cautious of these red trend lines that we've got right here. Okay, these are simply, bump and run trend lines. I've went over the bump and run pattern a few times on the channel, but essentially we have a bump and run on top of a bump and run. Here's your prevailing uptrend, and then you get that bump, right? And so, essentially when you break these trend lines, you'll be looking for a move to the, to the next trend line to the downside. Here's a prevailing uptrend, and then we have a bump again right here. So in the short term, if we do break this trend line here, I wouldn't be surprised if SPX really comes back down to that 44.80 price range, or potentially even the 44.50 price range, as that is where we have got two gaps down to fill on SPX. All right. We actually just broke out on the RSI. If we take a look, we had an inverse bump and run, okay, on the RSI that I was watching. Again, a lot of people seem to be using the RSI wrong these days because they're seeing things as overbought, and they're scared to go long because things are overbought. You wanted to see it break those trend lines, okay? Yeah. When things are overbought, the chances of them pulling back is higher, right? So if you buy here and you don't sell here, and then you see that big pullback, you get scared. But what do you see? We see the market actually continues to rally because it needed to just get some breather, get out of those overbought levels and continue to go up higher. And what we did here was we formed a bearish divergence where we had the highs here, the lower highs, highs here, higher highs, and that bearish divergence caused a significant drop. But that's what actually gave us our wave 4 structure right here of the ABCDE, corrective wave. All right, and we're looking for us to break this initial bearish divergence trend line. You can see we got the breakout retest, and that's when we really just started this huge move to the upside. And then here is that inverse bump and run. You have the downtrend, then you have that bump to the downside. We broke out of there, retested that, and it really pushed up significantly right here. So, we've been navigating things really well in the Discord. If you guys ever want to join the community and trade with us, okay, and see some of the different plays that we're looking at, as well as all of the valuable resources that you're going to find in there that most retail traders don't really have access to. We also have some AI trading bots in there that can give you guys some different trade ideas. The link to join the Discord is in the description below. Be happy to see you guys there. If you do join, shoot me a friend request. Let me know who you are. Tell me you're from YouTube, and I'll try to help steer you in the right direction when it comes to managing the Discord and figuring out how to use all of the resources inside. Thank you guys for watching the video, and I'm out.